All right, good evening, guys. Kenneth Tortoise Capital with the abbreviated strategy podcast for August 4th, 2020. So, got some work to do on the daily report. So, I'm not going to be reviewing that in detail. But I will cover sort of the debrief of the market and then hit some highlights of the trade for today. There were some good mind maps posted on the Patreon page today in support of the argument for taking a narrative approach to the markets and why note taking and mind map making are essential for organizing your thoughts and creating the reflective space for you to do additional cognitive work. That until you do that, all those things are floating around disconnected or only partially connected, so you get this very busy traffic jam in your head. The act of converting that into themes and concepts and pictures and snapshots and then larger concepts and processes allows you to clean those all up and get them organized in such a way that they have a place on the shelf, and then that settles your brain down by having that sense of closure for all of those pieces. So the act of note making, not just listening, but the act of note making and turning it into your mind maps has a very powerful clarifying effect. So that was the nature of the sketches and mind maps today. That's part of a chapter in a book on true storytelling and narrative inquiry that I'm writing with my mentor. I was invited to write a book chapter for their True Storytelling Handbook, and that should be a lot of fun. But that's building that idea out. All right, so let's take a look at what we got today. So yesterday was a big gap up, and it sold off briefly, pushed higher to a new 30-day and a 10-day high, and then settled in for a nice move. And today, what we saw, we were wondering if that would hold, is we saw a gap down from the yesterday's close to today's open, and then right from the get-go, one brief blip down, and then straight north in a strong move to close at a new 10-day high and a new 30-day high, again halfway between Z1 and Z2. The entire day's performance was north of the edge of the river. That's good. The 10-period regression line has now resumed its upward slope. Looks like this. And the opening of the day, the low of the day, was on that regression line. So all of this move was increasing signal today, and that's a good thing. Now, that's the 10-period regression line. If we take a look at the 30-period regression extension, we see that that's actually looking better than the 10-day. So the 30-day is now starting to accelerate. This recovery now on the 10-day period is causing the 30 to begin to accelerate. So that's a good thing. The dragon extension is solidly up. That's a good thing. And the PSAR is still marching northward. That's a good thing. And so today's PSAR value was here at about 323. Tomorrow's PSAR value we would project to be right about where today's bottom skin of the dragon and the previous peak RL270 can be found right around 323.75-ish. So all systems go to the upside. So we made a new 10-day high, a new 30-day high today, and it closed within a fraction of that previous high. We've got the RL90 is starting to accelerate to the upside. You can see that the Bollinger Bands are expanding, so we've got increasing volatility, and it's voting towards the upside. We've left the Bollinger Band mean back here in the dust. It's rising. It's at 318. The 10-day low is comfortably above that Bollinger Band mean. So that's a good thing. So all signs point to yes. The upside move is 332 is the target now for the RL90. The Z2 is at 333.50, and the Z3 is well off the stack here. That's up around 342. Well, if we were to take a look at that. Plenty of good, strong support levels in play right now. The RL10 price in the low of the day is strong at 328. The RL10 peak previously that we've now left behind was at 326.5. So you can see we're more than one ATR above that price level. Then we have the skin of the dragon at 326.50. The Z1 at 325.50, spine of the dragon at 325 even. The long-term fair value, the peak RL270 fair value at 323.74, skin of the dragon, and tomorrow's PSAR at 323.50. So all of that acts as very strong support. If that breaks, then it probably accelerates down to the 10-day low at 319.22, and then the Bollinger Band mean at 318. So lots of reasons to believe in this rascal. The moving RL10 was summer, has turned back into the fall, but it's rising. So the expectation is that could be back into the summer. That would be an automatic reinforcement pretty quickly. Looks like the daily spreadsheet has repaired, and so shortly after the briefing, I'll get that pushed out to you, and I'll probably do an additional voiceover to that once I get that posted. Okay, let's take a look at the sectors and see what we got. So the S&P was up basically 0.4. The Dow was better at 0.63, and the Russell was better at 0.69. So the large caps and the aggressive small caps both are pulled away from the broader market today. Let's work from our top down to see what worked the best. Let's go through the sectors. So as we go up the stack, looking at the sectors, the next best thing in terms of a sector was consumer discretionary at 0.8. So that was twice the goodness of the S&P. Consumer discretionary 0.8. Treasuries at 0.95, a very nice recovery today. Japan at 1.1. Emerging markets 1.3. Base materials 1.4. Oil 1.5. Oil exploration 1.9. The energy sector 2.4. Clean energy 3.0. Simon Property Group, so representing commercial real estate, 3.2 after a long slide down. And then at the very top of the stack, precious metals with Wheaton up almost 6% and silver at 6.6. Nikola Motors had a nice little recovery today after having been crushed recently, up 6%. Devon Energy continued its outperformance. It was up when the energy was down, and today when energy was up big at 2.43, Devon was up 4.6. So the long-term goodness in Devon continues. Let's take a look at some individual symbols. Coca-Cola, which we talked about yesterday, up 0.8. We have in the material sector, there's Cliff, slightly lagging materials, but then we have U.S. Steel was up 3.8 today. So good day for that one. NVIDIA continues to outperform Intel. So Intel was good today at 1.7. NVIDIA was better at basically 2.0. Walmart, which we identified yesterday as an opportunity, gave 1.8. I'm going to show that one a little bit later today. There's a workshop in a box on Walmart, and that is probably worth more than listening to the daily report once we get to that one. So that one's going to be pretty good. Now today, the tech leaders, the big fat TQQQ, was fractionally better than the broad tech sectors. That reverses the trend of the last week or so. But the triple tech sector was up 0.9, and the triple NASDAQ was up 1.3. Those tech leaders today, Apple up 0.67, Amazon 0.87, and Intel 1.72, NVIDIA 2.0. Things that underperformed today, though. Let's take a look at these. The broader tech sector, XLK, was slightly underperforming the S&P. A little bit troublesome there. We have Tesla underperformed, Twitter. Here's finance minus 0.4 in the red, healthcare minus 0.44, Mexico minus 0.6, Google, Facebook, Microsoft, Virgin Galactic, all of these guys underperformed. Virgin Galactic especially smashed at minus 13%. Kodak continuing to suffer minus 3.6%. It's down to 14.4. Yeah, so that's everything I want to notice on that. Let me just hit. I guess I'm going to talk. I want to go right to Walmart because that one I think is just really, really instructive. So, this was the trade frame that we looked at yesterday in Walmart. What we did was we framed this yellow zone here based on almost like this was the beginning of a 1, 2. So we said it could be a 1, 2, 3. If it opened inside the yellow box, inside the previous day's range, and then took out yesterday's high, that would make this a 1, 2, 3 pattern. So let me just highlight that better. So when we're talking about a 1, 2, 3, what we're looking for is rising lows. So the bar number 1 is kind of a big move down. It's the it makes the current swing low, and so when that closes at a swing low, it's potentially a bar 1. There we go. Let me try to get this. God dang it, Kenneth! Stop clicking those numbers. So when bar the bar that I've got labeled as bar 1 is a bar 1 because it made a new low in that swing sell-off. All right. So for a while, this bar here was a bar 1, but the next day it broke down to a new low. So this one is no longer bar 1. As soon as a new low is made, then the 1, 2, 3 pattern is over, and then we're going to test this bar. So then it has made a new low. So that's tentatively a bar 1 until we see what bar 2 does. So this bar here, I'm gonna label that in the yellow. See if I can switch that back. I want to make that orange so you can see it better. So We have bar 1 in place because it made a new swing low. This one opened inside that previous bar's range, so it's tentatively a bar 2 until, oops, it makes a new low below the previous tentative bar 1. So now suddenly this is not a bar 2, so we got to move over and test the next one. So now this becomes the working bar 1. And then that's bar 1 because it made a new low. So now in the orange bar, we're testing that to see if that's going to be a bar 2. Well, it opened inside the yellow zone. That's good. It sold off a certain piece, but it did not make a new low. And then there was and then it closed. So that is a bar 2. There, if we look at that close, hit behind that black line, we want to see that make a new high, that it pushed above, even if it's just a penny like it was yesterday. It made a new high. That makes this a bar 2. So now we're interested in bar 3. This becomes a 1, 2, 3 pattern. If the live bar 3, opens inside the yellow zone, so we want to see it open anywhere inside the yellow zone, and then if it takes out bar 2's high, so if it looks something like this, then we would buy it on the breakout on a mechanical entry above the high of bar 2. So 1 and 2 have to close and look like that. Then bar 3 opens, doesn't make a new low, but takes out the high of bar 2. When it does that, that's a 1, 2, 3 entry. So on the swing trade, when I'm doing swing trading one day at a time, then we have what looked like a really nice. There was a nice sell-off from the 10-day high all the way down to the low of bar number 1. So if we can get a mechanical entry when it takes out that swing high, or that the high of bar 2, then we can either use an aggressive stop of a one-day range risk, or I would accept, if you wanted a wider position sizing stop and said, hey, I'm going to use the RL90 or the swing low of bar 1, which is like the Bollinger Band mean, I would accept either one of those on a swing trading basis. For an execution basis, I use the low of bar 2. And when I'm computing the auto framer, what we're looking at is we wanted to see if range risk is that green arrow, then I want to see 2. That's about right. Whoop, sorry. Yeah. So we want to see 1 and 2 reasonable moves to the upside. And so in this case, if we got the entry on a breakout above bar 2, then we would see the PSAR dot as a reasonable target to the upside, and that's less than the 10-day high. So that's not an unreasonable move. In fact, if we come over here and look at some of these, the size of some of these daily moves in Walmart, we could actually see that kind of a move in a single day. Here's a daily move. There's a daily move. There's a daily move. There's a daily move. So we could actually get 2 of bar number 2. We could get that move in one day on a risk of just the yellow box. And that's just using mechanical entries. That's not trying to optimize it during the day. And so we look at if the yellow box is the risk and the green box is a reasonable gain, we then frame that in both directions because that's what we do. And we would say, would I be willing to get short at a breakdown of bar 2? Yes, I would. Why would that be the case? Because it just made a new low that it couldn't get to on bar 2. But if this thing is starting to sell off, then what that is doing is actually reinforcing the primary move, which is this big red arrow. Because remember, we have the RL10 peaked. It crossed the baby dragon. It crossed the mama dragon, came back in below Z1, and then the PSAR flipped here. So we've actually got, you could actually call bar number 1, if you had taken that as a supported fall crossing to the downside, or front running the supported winter, and then using the PSAR flip as your Wu Wei exit, you could be short from bar 1, and then if this thing worked to the downside, then you're looking for this box here. You would say Bollinger Band mean, and then if it breaks the 270, it'll come down and test the bottom of the 30-day low back in here. And so if this is leg 1 down, leg 2 down would then come over and test the bottom of this support level in this sideways quiet channel, 2/3 of the way down to Z2. So there's a strong argument then for this trade frame to be made as a critical state in either direction. So that's the frame that we talked about yesterday. And the downside is easier to believe, but the upside is not unreasonable. So let's take a look at so when we pull back, what had happened was, and now we're just looking at the daily, just on a daily basis. We got the open inside the yellow zone, a brief momentary sell-off. This actually became bar 3 and broke out of the yellow box, which now justifies where's my green dot? That's almost yellow. Maybe I'm getting colorblind here. So on a mechanical basis, we can be long here with a stop at the daily low. And then what we're going to try to do is figure out if I'm just trading mechanically with the end of the day, then that's just my trade. And then I wait to see what happens at the end of the day. And in this case, it closed, it stayed north of the yellow zone, closed well, got all the way through the dragon, and then held within the dragon. And that would be day 1 of a swing trade on a breakout from from a 1, 2, 3 entry on that pullback in Walmart. And then what we're wanting to see is that the bull market, which has been getting stronger, is going to keep unfolding like this. And then what we want to see is another move of that magnitude that now comes like this. So we would be looking at something like a 138 to the upside. And then where we would really feel comfortable is if it takes out the this 10-day high, and then this becomes an emerging dragon. And so the trade from about 130 up to about 134, 134.50, which is about a 2% move. That's going to be all tactical trading with a single position as a swing trader. Where I would be looking to get a second position in would be above that, like an emerging dragon above this price level here. Okay. So that becomes the, I'm going to make that blue so it looks like that's where our sniper would actually be activated as this trade starts moving into that position. Our sniper would try to preserve as much of that gain between the two blue arrows as we could get. But then if it cleared 134.50, then there's no resistance overhead, and then Walmart's going to look really good. And that would be looking like the second leg up. But if this thing rejects that price level and starts coming down, then this is where our sniper exit comes in, and now we would take a look at this green zone. Oops, sorry. We would now take a look at this green box and say, how far up the stack did it go, and therefore how much were we willing to let it come back if it couldn't break through this resistance at the peak of the RL10. So that's why I have that illustrated as a sniper decision point, because you're either going to preserve the gain that you made on the way up, or you're going to, if it makes it through there, you're looking at where am I going to get my second position in. And then, as we can see over here, sometimes those big breakouts all happen in one day. I mean, that would be kind of amazing if tomorrow, to build on today's move, looked like this blue arrow as a second day momentum. That would be kind of cool, because that is a 22. That's a $9 move, so it could move from 130, let's say, to 139. That's how good that could be. So that's really the potential. And then the key to getting that kind of move is if it can get above this blue arrow, which is acting like a lid. And then I would tell you that, this kind of sell-off, this was not a painful sell-off. This was 5 or 7 days of sideways, a brief 2-day sell-off, and then recovery, and then 2 grinding days northward. So this actually feels like this could participate in some upside moves. So that's sort of the upside, and that talks about how we might manage that. So that is simply doing swing trading one day at a time using end-of-day data and framing trades in both directions, and then using the principles of this 1, 2, 3 in order to get my entries, and then picking a manageable risk box on a daily basis, and then framing that trade in both directions to see where it might go if it fails, but also where it might go if it succeeds, and then crafting my strategy. So that's chart 1 of 3 and chart 2 of 3. So chart 1 of 3 was this one where we were just framing the trade in both directions. Chart 2 of 3 was then it unfolds on today's bar, and then how would we manage it if we were just looking at the end of the day. Now, what's crucial for you to notice on this, when we're going to look at bar 3, the reason I'm such a big fan of core and turbo, and I'm always mentioning that, if I'm teaching a swing trade course, I always make a point, I can't help it, of talking about why you might be interested in selectively day trading in order to improve the opportunities in here on day 1 technique. And if I'm doing day trading course, I'm always talking about the use of the swing trade time frame in order to find critical states in symbols of interest like Walmart, so that we can find these kinds of moments. And the payoff ends up looking like this chart. So the first thing that I'm going to do is unbusy this. Let me just clean up some of this crap for you. So we don't get too distracted. So the first thing that I want you to notice is that what I'm showing now is the daily frame boundary. All right. So this yellow box was the upper limit, and this black line, this was the upper limit of the daily trade frame that we looked at on this chart. So this yellow box that you see in here, and that upper limit at like 130, that upper limit you see at 130, this yellow box. When we drill down, and now we're looking at 1 minute charts right from the open, this is the upper limit of that box, which is at like 130. Okay. And then what I'm noticing is that in the last hour of the day, that there was this, I think of it as the noise box, or the minute, and it's going to become my minimum manageable risk box. And this is about 30 cents in Walmart. Okay. So I just take that across. You can see that except for those two little blips, like two little dragon horns that went beyond Z3 to just see if anybody was sleeping. This thick outline box really that's a 30-cent difference between Z3 and Z3. And so it's normal, just when there's absolutely no buying pressure and no selling pressure, just the algorithms grinding back and forth, just probing and grinding and idling, it stays within that 30-cent. And so there is no significant movement anywhere that price is inside that box is insignificant in terms of creating a signal. Now, so that what I notice is when it opens basically where it closed, right at that previous VWAP, which is right in here. And then the upper limit of the yellow zone is up here at like 130.20. So it would actually have to make probably two of these boxes, to break out of yesterday's trade range, and that's fine. So my idea on this one is, at a minimum, if I'm intraday trading, I could just wait and see and just say, hey, if you can get out of the yellow zone, I'm ready to start buying that at 130.20. But you also notice that because I'm doing some intraday and maybe some hybrid frogs, I might be able to do something addition to that if I have some intraday skills, that if I find today's low of the day and hang it, stack it on the bottom, I actually might be interested also in getting long, possibly in here, and that's because I can see two risk boxes up here. So if I can get an entry anywhere between this breakout of Z3 and this blue line, I could actually get an entry in this space, and then if it does get above that blue line, I just got a price improvement of like 30 cents. So I don't have to add a position. I could just accept this one as an earlier entry, and then what I'm doing is front running. If the market were really behaving well and this thing was doing better than the market, then I could actually justify that even easier. So I'm now starting to think about being more aggressive intraday trading than just waiting for the mechanical entry. But I could wait for the mechanical entry. There's nothing wrong with that. So now the next thing that I want to notice is that that after the open, get this out of the way. In the first 5 minutes, it gives me a quick sell-off, and then it recovers. And now it's right back to where it opened, and that first surge of upward pressure. And is there anything meaningful in that yet? Not quite, because that's just about one noise box. But I notice that, oops, sorry. I noticed that the RL10, which briefly dipped into the winter, rolled over, crossed the baby dragon, is back up into this noise range, and it made a measured low, and there's a PSAR flip. So I may actually be interested. I think I could actually buy that there and then use this as something like a low risk move, because now you can see that I've got two reward boxes just to get up to yesterday's high of the day at that horizontal blue arrow. So that's an optional play. You could give that a try. That may not be in your trading plan, but that's a something you could consider. The next thing that I'm noticing is that let me turn this back to blue. I guess I'll go green. So here's one where it makes a move halfway out of the noise, gets halfway to the blue arrow and then rolls over. Now, if I had entered at this yellow dot, I'm not going to lose money on this trade, because at a minimum, I'm going to want to scratch or maybe take a sniper. I'm not going to let that come all the way down to hit me. If I'm using the Wu Wei, then I could just take this. And then right about here, I would have been moving that stop up to here, up to the PSAR, and it would have hit, and I would have captured a no lose plus dinner for two. So the Wu Wei is not a bad way to think about it. If I see 1, 2, 3, 4, 5 little PSAR dots, why not just take one early? Why not just take it? So that's a way to think about getting paid early and just getting in the green. Well, if I don't take that, if I'm going to be a conservative trader and I'm waiting for my mechanical entry up here, so all of this is just noise, but it's a special kind of noise. What I'm noticing is that now a new low of the day has been made, and I'm sorry, the low that it just made is a higher low at 2. So when I compare the low here, and let me slide that up a little bit so you can see that easier. The low that the RL10 made at 1 now the low that it made at 2 when it reversed and crossed the baby dragon was higher. So that's a good thing. So now when I see a low at 1, a higher low at 2, I'm feeling like there is some upward pressure here at 4. And now that the Bollinger Bands are pinching, it's because we're now 45 minutes into the day, and it hasn't really collapsed below yesterday's, price consolidation area. And the VWAP is starting to rise a little bit. Now, buying 5 is a real contender. 5 is a real contender for a purchase because what we have is failure to fail further. We have a low and a higher low, and we saw that there was some buying pressure already today that was not evident yesterday. That's guys that wanted waiting to see, and now there was one surge up, and that's halfway to the really powerful signal here. So 5 is an effort to get 1, 2 noise boxes. So if this is now my noise box, if I buy it at 5 and my stop is at the PSAR flip, that makes this black box my minimum manageable risk box. And you can see that there's 1 and 2 of those just to yesterday's high. So there's a tactical reason. Then if it comes up here and breaks through, now I have price improvement. I can just take 5 as my entry, and now I've got a really good swing trade going, but instead of getting 130.20, I could actually get 129.40, which is an 80-cent improvement on my entry. So 5 is a legitimate consideration, but I didn't take that. Now what I notice at 3 is that same phenomenon that we saw before. I saw a swing low in the RL10, a swing low at the RL10 that was higher, a higher low at 3 when the RL10 rolls over, and now this upward pressure is reinforced. This number 4, this upward green arrow, is even better. Now what's really interesting to me is to see, is this move going to break through the RL10 peak and the RL10 peak? So I'm getting this choppy sideways, but it's horizontal resistance here, but I've got rising lower pressure. So you can feel like this is becoming this rising pennant or this rising triangle, and there's some potential for some upward pressure. And so that means at 3, I might be very interested, in buying 6. So at 6, I now have an entry that was kind of similar to this yellow dot, the number 5. Number 6 is still basically the same entry, but I've got extra confirmation that this thing is working, and I haven't really lost much of the tactical opportunity. All I'm really doing is saying, is there some no-brainer way to get into this trade now that the morning smoke is cleared? I've got 1, 2, 3 higher lows. I'm getting ready to test this blue line. And then there's my Z3 breakout, and then there's my mechanical breakout. So this is starting to feel pretty good. And then this risk box that you see starting to form would be, if I enter at 6, the PSAR flip is down here at 3. So my risk box here turns out to be the same size as this noise box over here, the minimum manageable risk box. So all of these black boxes are the same magnitude. 30 cents is the noise box. And you can see it just creeping northward. Now at 7, I'm now kind of officially interested in this thing, because now it has crossed the VWAP and held. After 6, it tested the blue line, pulled back for a moment, didn't even get through the dragon, didn't flip the PSAR, and then is breaking out at 7. At 8, there's a breakout of the Z3 line. So 5, 6, 7, and 8 all are legitimate ways to do a turbo approach, and you would be using exactly the same size minimum manageable risk box that was defined by yesterday's noise box from Z3 to Z3. But if I don't take that one, now that price comes up and breaks out at 9, and now it's broken out of yesterday's mechanical trade frame from the edge of the yellow zone and the beginning of the green zone. Now it has broken out at 9. Now, if you had a plan to just go ahead and take 9, here's a way that you can start thinking about doing this with end-of-day data and some turbo. You might say, if I was going to trade at 9 with, let's say, 1,000 shares, maybe I could decide that if I was going to be in here, I could take 250 and then 750 at 9. Or I could take 500 at either 5, 6, 7, or 8, and then 500 at 9. So I might get a blended entry, and that way I've built my position of 1,000 shares or whatever my swing trade position was going to be. This is not a swing trade yet. This is just an intraday mechanical entry using the confirmation of the green zone to say, yep, I'm now convinced that real buying pressure has come in because we just exceeded a price that we couldn't get to yesterday. This is actual evidence of new buyers coming into the market. What do you give up by waiting for that confirmation? Well, you give up the opportunity at 5, 6, 7, and 8, and that works out to be about 80 cents per share. So if I was trading 1,000 shares, that's $800. So an entry at 7 earns you 400. An entry at 8 earns you 200 extra dollars. So when you start operationalizing these numbers, it starts to take on some perspective. All right, so 9 is now the mechanical entry on this swing trade one day at a time in Walmart. It makes a noise box move up, and now at 10, so now if I'm long at 9, right in about in here, I want to be at no lose plus dinner for 2, and I could either just play this and say, go ahead with your bad self and let's just see if you're going to make some gains. Or I might take the position of, let me take an extension of the PSAR dots or the Bollinger Band mean or something like that. Would be the PSAR dot. This would probably be the Bollinger Band mean, looks something like that. So now I'm at no lose plus dinner for 2 with my entry at 9. At this point, I actually don't care what it does. I've committed to either this no lose plus dinner for 2 and then I'm going to manage it later, or I've just said, you know what, I'm just going to manage it with this line, and then whatever it does is what it does, and now it's a science project. It now has made 2 risk boxes from my entry. And that's, from 9, it's now up here. You could, now I have this box drawn at 10, that because this failed to fail, and now has taken out the previous RL10, 10 is actually a place where you can add a position. And by the time you're adding a position there, if you're already at no lose plus dinner for 2, this becomes a way to start developing some skills at adding positions and growing in size on the basis of increasing performance. So I might be just sliding this risk box all the way up, and I would actually like to see this thing, start picking up this kind of a move, if I can draw that rascal. Now, if we look something like this, and we see that dragon moving up in the Z plus 1 line, it should probably look something like this if this thing's going to work. If it just continues with the same strength that it had from 9 on the breakout, then this risk box should just be, that's all the room that I need to let it run. And that's the green arrow shows what a continuation of buying pressure would look like. So I want you to notice how that as this starts moving up, the PSAR starts pulling away from the Bollinger Band mean. And so you might be a sniper, at some point, you're thinking about being a sniper. A sniper on the dotted line, or a sniper on the Bollinger Band mean. Maybe this is just the manager in here. So you decide when you want to start activating this. Whoops, that should be red. Sorry. And so you might be sliding the sniper up in here, somewhere in this. So a sniper exit's going to be anything that happens inside this land between the rivers, while the manager is just marching his way up, just tracking the Bollinger Band mean. Okay. So now at 11, we've got another failure to fail, and it broke out. So a move at 11, if I didn't get a second position at 10, I could get a second position at 11. But as you can see, this thing is moving out nicely, even better than the original estimate, because now you can see this thing has some additional power moving up this way, that is starting to look more like this. So I might just elect to move my manager stop up to here. And now he becomes this kind of guy. And maybe my sniper is living inside this space. So I'm making a conscious decision as I manage this trade based on my own risk management profile and the time of the day and the market conditions and where was this thing inside the sector. And all I'm doing is building on the power and potential that was available from the daily trade frame. And I just know that as long as I'm above the green line, this thing could be a range stat kind of a move. So I find the low of the day, and what I'm going to do is build my range stat. We'll call that something like a purple line. Now, if Luke was on his game, he'd be telling me right now what the range stat in Walmart is. So whatever it is, I don't care. But whatever that is, I can now use that as a reasonable upper limit on the move that started off with a low at 1. There's my low at 1. And I just stack a range stat. That's the average range plus 1 standard deviation, or 1 frog box. And then off it goes. And then as I'm just fighting my way through the tactical decision making, and as long as this is moving up, the only thing that I'm even sweating right now is nothing. I'm not actually sweating anything, because this is just a science project to see what makes sense in terms of capturing gains and giving it room to run. As long as I had got my initial no lose plus dinner for 2 in, this was the key decision. This was the key moment, is the move from the Wu Wei exit up to lock in at least a no lose plus dinner for 2 gain. That's the key insight. I notice at 14 that the VWAP is starting to accelerate. It was climbing, and then right about here, when this started taking off, 7, 8, 9 happened. That came in with enough volume over here to start dragging the VWAP north. If this VWAP can get above yesterday's high, that's going to be a really good thing. And then I notice up in here, most of the volume is in the green, so that's buying pressure. So long at 9, at a minimum on the mechanical entry. Oops, sorry. With the possibility of a second position at 10 and or 11. So that could actually be 3. And now it has moved. If you look at the distance that it's moved from 5 to 6 to 7 to 8, and all the way up to 9, if we just take this as something like, the move in the yellow zone, and then stack this, this is really starting to feel pretty good, because we have leg 1, leg 2, and now we could think about this being a possible leg 3. And this is why at some point in here where it's really starting to work, this is where I want to start activating. If I haven't activated my sniper manager combo yet, then that's about where I want to get that done. Even better. So now I'm going to slide this dude up. If I hadn't moved my stop from here up to here, I got to do it now, because you can see the PSAR is already starting to move up. So I'm going to move my stop here to the Bollinger Band mean and just keep tracking him all the way up. And then my sniper has some discretion inside this space. I may not use him at all. I might just say, that's good enough. But that's the land where my sniper might be active. At 12, this thing peaks, and now it pulls back. So sniper exit at 12, and I'm really loving that. So now if I could get a move from 5, you'll notice that my sniper the manager exit from Wu Wei is out at 131.15. So if I can get the move from 5, then my gain was 75 cents on a risk of 30 cents. So that's darn near 3. And then the sniper makes it 3.5 or 4 on the first position. But even if I just get this move from the mechanical entry, I'm sorry, that's better than that. I'm sorry, 129.50 to 1. Oh, I got that wrong. 129.50 to 131.15 is $1.60. So that's 6R. Sorry, 6R from 5. From 9, if I take the mechanical entry, my gain is from 130.20 to 131.20. So that's 3R just on that one. And now if I had, the second entry from 10 and or 11, I'm getting all these multiples on my positions. And all of that is kind of measured tactical trading, all of which is set up by that original daily trade frame. I just can't tell you how important that lesson is. And the things I really want you to take away from this is that you should be able to describe what I just described in the numbers 0 all the way up through 14. 14 was just the observation about the behavior of the VWAP. Because remember, even as I'm taking this exit up here at 13, So if I take the manager's exit on the Wu Wei at 13, and remember that actually, look how much better that move from 10 to 12 was, that the original projection of the Bollinger Band mean was like down here, and then that became the Z minus 1 line. And so that actually improved all the way up to 13. So that's how strong that move up was, that it raised the Bollinger Band mean stop up there, and that feels pretty good. And then I want you to notice the power of that lens of this box, this noise box, all the way through the day. That became the standard, unit of risk, reward, noise, and performance or whatever that allowed me to calibrate. So if I was making some decision in here, instead of always using exactly the entry to the PSAR, if I just standardized on that normal box, now that becomes my chip size. And I can see one, I just buy it, and now I'm managing a standard brick or a standard lens of a standard management box. I like using the previous day's Z3 to Z3 stretch, when it's very sideways, quiet, channely. That just feels natural, normal. So take a look at that lens all the way through. And then I just want you to see how I'm using these different price levels almost in a geometric way of like Lego blocks. I'm kind of building the trade frame as I go, using scaffolding and steps and ladders and all that other stuff. So if I can get a turbo trade from 5, 6, 7, or 8, then I've front run 9. I could have actually gotten 4 positions in, like let's call it 5, 8, 10, and 11. Then this could have easily been 10 to 15 execution hours just today, in just the first 2 or 3 hours going into the lunchtime. And then longer term, that's a 15R potential on a trade frame that on a daily chart looks just like this. And what in your experience or in other systems or in other screening criteria would get you into a 15R trade given this framework with a move, some kind of measured pullback, but a 15R trade before it even gets north of it just barely got north of the dragon. There was a 15R move intraday from the top of the yellow zone to the top of the dragon, which is only a third of the way to where we had originally framed this as an opportunity for this kind of trade frame. This green box was justified by the architecture of the trade, and we just detected and learned how to make a 15R trade in half the distance from Z0 to Z1. This is like Z0.5 up to here. That's a potential 15R trade if you pay attention to your knitting, if you pay attention to this blocking and tackling and the use of the minimum manageable risk box. And at no point was I taking more than a 1 hour risk. And I didn't believe in that trade. It just never failed. That's not me being right. That's just me being prepared and just managing the downside risk and then knowing what reasonable upside movement looks like. So I just want to suggest that that's a really important lesson. Walmart, for crying out loud. Brazil. Look what Brazil gives us. It gives us a once you start looking at these things in terms of these boxes and bricks, you almost can't stop looking at them like that. 1, 2. You should be feeling a collapsing dragon in here. And then the second leg down, and then a third leg down into the standard standard normal box. So you should be drooling. Whoops, you should be drooling over this supported spring crossing in here. Supported fall crossing. Break out above the VWAP. Standard position sizing. And then this move from the RL10 extension, you look at the first leg up is testing the RL270, the second leg up is the VWAP, third leg up, was this support level over here, fourth leg up here, and then if that breaks out, a fifth leg up. And now what it's already done is just 2 of the 5 on the way up. Then that Bollinger Band mean acts like a pretty nice exit manager. And if you play the trade in the usual way, you end up getting that managerial exit right there. So this supported spring crossing after the very harsh winter, which was available on a collapsing dragon over here. You can see why on this chart, why the collapsing dragon is my favorite thing, especially when it crosses the VWAP. Ugh, you can just feel that thing snap. And now if I come back over here and treat this support level, and notice that's a breakdown of this Z3 and that previous support level over here. You can just notice the difference in the speed of the fear and panic move on the collapsing dragon. And that's why, to me, that is my favorite pattern. And so even though I like, maybe that got you in as a supported spring crossing. I'm not offended by that. I'm not offended if you were willing to try this one. But if you took that one, you better be getting short here on a collapsing dragon, for crying out loud. That doesn't stay wrong too long. And those collapsing dragons pay off quick, fast, and in a hurry, because that's the shattering of amateur dreams. And notice when this noise box over here, this noise box, if that was your wrist box here, when that thing cracks, that makes this one massively important. And then notice how long when it consolidated here for a moment, it didn't even stay in there very long. Never even got through the dragon. Didn't touch the PSAR at all. And so that little retracement wasn't even a retracement. It was the pause to give you a chance to add another position, because by that time, this thing is already free and clear. There's nothing holding that up over here. This is all just running amok. Then what you have to be able to detect is the difference in the slope. Look at the difference in that kind of move. That thing's starting to slow down. If it was going to continue to fail, it would have done this. It didn't do that. It had a little retracement and then started to do this crap. And then that leads you right into the potential upside of your supported spring crossing. So looking through the lens of scaffolding and architecture and geometry and the statistics behind these measured moves is everything. Devon Energy does nothing but it spiked down to yesterday's VWAP and then does nothing but this. So maybe that first one, you try that on a supported spring, but then it pulls back, and maybe you get, maybe you only get some of that. And now you have a supported, that now it fails to fail further. Now you notice the RL10 belly over here, and then a higher low, that low, this low, and notice the bend in the dragon. The dragon was here, and the belly of the dragon was there. So you got to be able to detect that, so that when it fails to fail further, you can now be poised for this move. Oops, with this wrist box. Let's draw the Wu Wei exit. At somewhere in here, you might have picked up the sniper. You decide how far up that stack you want to activate your sniper. Was it here? Maybe. So maybe that's the decision point where you say, I'm just going to track half that with my manager on the red dot, and then half with my sniper wherever I just darn feel like it. And then there's your give back. And there's your gain. and there's your risk. U.S. Steel does the same thing. I'm not going to go through that. Everything did that today. U.S. Steel just continued to grind up, and there was buying pressure in it all day. So those are the things that I wanted to say. I want to get the daily report done and cranked out to you. But that should give you plenty of you should just write in your notebook that the August 4th Walmart case study for core and turbo trading is must-watch TV. That's like the 2-hour battle drill. And the supported spring crossing kata. I watch that every day for 30 days. Until you hear it in your sleep. Standard play. Nothing magical. It's Walmart, for crying out loud. All right, guys, that's everything I got for you. Let me get the daily report out to you, and we'll get that thing going.